Welcome back to this another live session, traders. Welcome to CPI live trading session. Today's focus CPI and two important instruments that we will be looking at this session: British Pound US Dollar and XAUUSD. We will be looking for entry opportunity on the lower time frame as CPI coming in shortly after. If we look at the timing, so it's in margin 12:30 a.m., which is nearly to 2 hours, but we will be looking for entry before and after CPI. And I believe that, guys, you have watched the previous session as well, and once all of you are here, and also follow the prompt in the live chat, you can request any pair that you are trading or gold based on time frame to specifically analyze your setup, and I will be looking at specifically for those who will be with a specific time interval in this live session. This live session is not only for live trading but also for education and analysis. Welcome, and this is NY session live. We are looking for CPI entry. First of all, before we look for any trade setup, hello, welcome. And if you are here, you can write something on the live chat so that we know that you are here, so you can begin today's trade setup. I have two instruments currently on watch list. Good evening, welcome. And I have two instruments on my watch list. One is British Pound US Dollar, which is approaching the daily support. Also we have XAUUSD, that means that gold, on watch list. In the live chat you can write which one you prefer to look first. Gold, okay, so I see some request for gold, say USD. All right, okay, we'll be beginning with gold as usual, and then British Pound US Dollar. If you look at the daily support, the market is approaching a key daily support level. Because it's approaching that key daily support level, where we are looking at potential entry on a rejection of this daily support. If you look at this is the daily support level the market is approaching, around 8 pip away from the daily support. So we are going to keep it on watch list. This is the 15 minutes price action. If the market straight drop back below the daily support, we will be looking for entry on GBP/USD. This is on the watch list at the moment. Now going to XAUUSD analysis. So first of all, we are going to do a multiple time frame analysis here on gold, and looking at the daily market structure. Now daily price action is crucial to look at, because based on the daily price action, based on the daily market structure, we will be able to find entry in this market. So looking at the daily move, and the first step, two things that we need to confirm before we look for any entry. One is the trend, so that we know that the directional bias in the market. So if you look at, this is the daily trend, right? So the daily trend on gold is bullish. All right, so, and as you know that from two crucial factors that we can consider about the trend is, one is the moving averages. So if you look at the daily 10 and 20 exponential moving averages separated from each other, and 10 EMA above, 20 EMA below, which is typically uptrend. This is from the indicator perspective. And also if you look at the market structure, the market structure is, we can see that it's a bull market, so we are looking at potentially bullish setup. Now if we look at the recent time frame, 2 daily price action, because the reason I'm looking at 2 daily is because of the weekly confluence, because yesterday the market opened here. So these 2 daily price action are crucial because this is where the weekly open. Now there are 2 potential scenarios can happen today. One is the market to come back to the daily low. So I'm drawing the today's low here, and the return back again to fill that daily high. The other potential scenario can happen that the market is straight drop down to the daily gap open. This is also possible, and we'll see that if the market drops down here, that might be very fast track drop depending on the CPI that coming up. And I got a previous question, Matubaria sir. Okay, so about the news analysis, yeah, absolutely. Okay, so news sentiment, the fundamental sentiment is very important in terms of the bias. So sentiment is not the retail sentiment. There are 2 kinds of sentiment. If you guys looked at that, might get confused with the sentiment. So don't get confused with the sentiment. There are 2 kinds of retails. There are 2 kinds of sentiment. If you get confused, then there might be completely opposite effect. Now one sentiment is that if you look at the retail sentiment that you can find everywhere, you can find on news, in the in the broker website, or many other areas that you can find a retail sentiment. Retail sentiment more often goes opposite. This is a crucial, we'll be discussing on later why retail sentiment usually goes other direction. Okay, so the other sentiment is the news sentiment. For example, interest rate decision, CPI, PPI, or NFP. So the that Fed's interest rate decision or future interest rate decision, risk on and off sentiment. So that's where you want to look at, because the sentiment that comes with the actual interest rate data, that plays out based on the market structure, and when we align that with our entry, it's going to increase our probability. But if you look at the retail trader sentiment, that usually goes the other way. So if you see that, the reason is, if we look at the retail sentiment, is because smart money trades opposite of the retail trader. So if you see that, usually retail trader sentiment come as a how many retail traders going long and short, right? So if you see that let's assume that most retail trader believe that the market will go up. So most retail trader look for buy, and that will be a potentially an opposite directional move the market may move, is because the market is a market, right, where there is buying and selling happening all the time. So when you are buying, someone else on the other side need to take the order from you to make this transaction happen. So as a retail trader, you always need to look at the volume in the market, which way the market is heading. So that's why we will be looking at mostly the new sentiment, the data in terms of. So, and currently gold is so far bullish. There are two factors that we can see in this of being bullish. One is the geopolitical, it's also a sentiment. Okay, so when there is a geopolitical tension, gold usually goes higher. The other is there is a potential for 2026 rate cut coming, and that also bullish for gold. So this is a overall sentiment that we are looking at along with the trend. Now going to the technical, so we got the sentiment or the fundamental looking to be here that bullish. Now if we look at the, which is the retail sentiment, now if we look at the technical, that means the trend in the market is bullish, and because the trend is bullish, we are looking at this market to push back to the upside. Now anytime there could be a sudden shift in the market sentiment, because the market has this daily price action that you can see, it's an all-time high candlestick pattern. Usually if you see the market in all-time high, there is a possible for there is a possibility for a rejection in that market. So but still we are considering the trend as our primary guidance for an entry. Still we would like to see that the market is getting a rejection from an important daily support level. So going back here on the lower time frame, now as we have found it, the directional bias here is bullish. Now I'm looking at here in that market to, if you look at the lower time frame, dropping down to the lower time frame here. So if you closely look at it, you can see there is a multiple rejection from this higher price here, which is eventually bringing that market here back below. Now this is the current lower time frame support. We had our previous session an entry here during the London, and I believe that I have shared that trade in the group. We bring it up a little bit for an understanding. So in the free Telegram, I do a pre-London session and post-London session analysis. So if you look at here, this is the pre-entry analysis. It's a simple analysis. I like to do the simple analysis just to understand that, you know, we can do a lot of complex analysis considering the daily multiple time frame levels and key support level. That might confuse our decision because the market may not align all those factors all together. But when you have a simple strategy that where you want to look for entry, stop loss criteria, take profit criteria, that's simplest way you can do that. Now, so this is the trade was posted on the London session breakout during the time period. Now, if we look at the later also, we have secured the trade again with nearly to 40 pip, and it might vary a little bit depending on your entry. Later the market has moved that direction again. Now at the moment, this is the level that we have opened the position, and later we see the market has made quite a bit of movement. Now at the moment, if we look at it's now breaking the trend line potentially again here. So looking at the 4 hour to see that where it is heading to. This is the current intraday support, and I think what we could see, guys, could be different. You know, the market is very random, but I think there might be a retest of the support here. Okay, and then once the market break the support, retest, could bounce off that level. So therefore, breaking below to the current session support is an important zone that you can look at, and even break of this trend line is an important support level that you can look for possible bullish entry. So the current support is here. Wanna see breaking below. So far this is the plan, to look for buy entry after break of this low, and there is a higher chance that if the market managed to break below, or even from that level to go back up again. If you look at this, is a dynamic level of resistance here the market is respecting. So it can happen that the market is breaking out of this and going back to the upside. If it happens, if the market breaks out of this level, there might be significant move back to the upside. In that case, we may see that. Okay, so if you look at this is the 4 hours high, we may see the market is crossing the previous session's high, which could bring the market back above to cross nearly to 100 pip, move back to the upside. So these are zones that we are looking at for potential entry. If the market breaks above here, we will be looking for buy to this 4597 level. If the market breaks below, also we will be looking for buy to the upside. Here now in a sideway, so you would like to see, in fact, if it is breaking below for a deeper liquidity grab in that direction. So that's the analysis, that's the plan, and share your thought also in the live chat. What you are looking at, and which instrument you are looking at, and what time frame you are looking at. You can discuss, share your thought here. Now at the moment we can see the market is in a sideway, slowly trying to break to the upside here. You see that I more often look at the multiple time frame. Sometimes it becomes a little bit of difficult to follow, what the levels are, what the candlestick pattern. But when we look at the multiple time frame, it gives you a very clear understanding about the trend. Because when you look at such as the 1 minute that we are looking at, alone this time frame will never give you a full understanding of the market context. For example, if we compare the 1 minute and 4 hour, I'm going to the 4 hour here, that still in this one here. So if you look at the 4 hour, right now, the first level that we have drawn, look at the 4577, the other level here that we have drawn at 4573. So these two levels are significant. The market may come down to test or may not come. Okay, so this is why if the price is remaining bullish back to the upside, this level might be respected. Hello trader, welcome. Now in this area, it's slowly building its momentum back to the upside here. And I'm looking at a potential entry after. So if we see that a clean breakout pullback, we will be looking to buy here for an upside move back to the upside. Do you think that maybe the news will retest 4.96? Yeah, there is a possibility for a retest here with the news, and which is as there is a news coming, we might see that there is a complete break to the upside here. And CPI is crucial because there are 3 high impact news. Now it's now moving in the major direction of the trend. So because it's moving in the major direction of the trend, we may see the market to eventually remain back to the upside here. So it managed to break above. Here it entirely broken resistance line. Would like to see now a pullback before we look at an buy entry. It's entirely upside movement here in that market. Okay, getting some pullback, and as the price already has broken out of this resistance line, I'm looking at entry. Do you think that maybe the news will retest 454, 4.97 buy from here? What impact could CPI news have on gold? All right. So look, the news more often you see the news will not create a retest. News normally does a spike. A retest means that, a significant level, the market will come, will get a rejection. News normally doesn't follow rules, so it just will have a spike and it will move. Okay, so here the market, after this break below, it's getting some reaction back to the upside. Here, this is the 1 hour candle close coming. I would be looking to buy if the market breaks the session's low here. We see some bullish bias, but still we'll be waiting for the confirmation. Firstly, news usually doesn't retest. So you see that news more often will create a spike. Then how we can use the news is there are two ways we can use news in our trading. The first way is the data after. So there are two move happens in the market. You'll see that one is the pre-news. That means before the news like this now, it's around a couple of hours. The other one happens after the news. And what news does is that the first thing the news does is it breaks out the market from consolidation. Now, before the data come, you won't be able to know that what is the outcome, right? No one knows what's the outcome of this data. That means it's a positive or negative. But there is one thing that we can see that more often before the news, there is a breakout of consolidation and the market start to trend. Because as a technical, if you look at the technical analysis of the chart, you can see the move in the market. You can understand the trend. So keeping the news in the front will give you an understanding of why the market is moving before the news. So there is a potential for a trend. Now there is another trading opportunity comes just after the news, right? Few minutes later, 5 minutes to 10 minutes to 15 minutes, there is a really good trading opportunity comes down. It's important to see that why also those after the news there is a trade, there is a new trading setup comes and the market moves a lot. Do you have an idea on that? Or what's your thought? Why do you think that, like, why the market really moves after a big high impact news? because if the market doesn't move, there's no trade. So it's crucial. Okay, here we are looking at this market to trend. Candle closing in. This is the 1 hour price action, which is forming a double bottom and slowly potentially breaking out. There is a trend line here from the 1 hour, which we might see the market to go ahead and break that high. So daily price action where the market is approaching the daily high. So this is a long-term bullish market. The trend is showing up to be bullish. Okay, there is no news, but there is a breakup structure. You can see this is a stronger breakdown here. Might be able to get in a trade shortly after, once you see the price has now this is a very sharp breakdown. It might bring that market below. So what impacts CPI? Rejection of the resistance line. Now it's breaking out of the trend line. It's an order block. Okay, here I will be looking to go long on XAUUSD, keeping stop loss below this support level, which will be nearly to 68 pip stop loss, and we'll be explaining later the strategy and the logic further. At the moment, if you look at, this is where there is a breakup structure and the market has dropped down to this order block. So I'll be explaining later also the order block, and here looking for I will be dropping down to the stop loss little further downside for nearly to 65-66 pip stop loss, with a potential move back to the upside for a possible upside. So entry buy at 4587, that opening, and where so stop loss placing at 4580.97 with only 1% risk per trade. We can target for higher TP, but today's move, that we can see the market didn't move much today, and we're looking at here at the moment, but we may be able to change the TP target if needed. So setting TP target at 4607, but we might manage the trade earlier if needed. So open long on gold. So open long on gold and expecting here a possible upside move. If the market cross this high, you will be able to gain about 40 pip. So you see the couple of narrower candlestick pattern formation here. So this is a I have open buy trade by market with here the stop loss 66 pip. And TP target we set at 4607, but we might manage if needed the earlier depending on the price action, because we want to see a very sharp breakout. If the market doesn't show stronger price action, we might be taking the profit accordingly if needed to see the market is not moving in that way. But so far we see that there is a bullish trend and we have opened the trade in the direction of the major trend with a tight risk. Definitely risk management is key. If the market doesn't go in our favor, which can happen, then we will not be running the trade more than the stop loss. Then we will be looking for further entry later in this session. The moment we can see there is a 15 minutes candle close here, and also the 1 hour candle close with a long doji. And looking to see this market to break out here. Hello trader, welcome. what impact could CPI news have on gold? Okay, so until there is a data coming, no one knows, right? But the market is, the long-term trend is bullish. So because there is a bullish trend, and today's price, if you look at the daily, so far on a pullback. Now, the data might bring that market even below the weekly low if there is a very different data come out of the news. But at the moment, so far, the technical analysis that you can see that the market is showing upside bias so far. And here he just created a structure. The imbalance is back to the upside, looking to see that it crossed that high. So here is the market is showing to be upside in that area. If you look at creating a series of higher low, it's coming to the support here. And it's on the intraday support. I have quite a few stronger consolidation in that area. Give a little space here for possible rejection. Now from the 4 hour, if we look at the market structure currently, we had a 66 pip stop loss here. Now from the intraday, the market has rejected off that level, expecting it to potentially bounce off that level. Okay, so there's a series of lower high here. Now we'll look to see that how far it might drop down in that area. The market might, if you look at it more often goes to any level which is usually to its lowest level and then revert back again. The risk management is very important to see that in case the market may do always in a very different way than you expected. So this is the session low, but the overall bias is still bullish. In case the market breaks the low, then we will be re-entering again if the market drops down well below here. This is a bullish market structure, so the bias here is still bullish for longer term picture. If we look at going to 1 hour price, 1 minute chart, prices drop down back below. This is the initial move that started from here back to this level. Prices crossed that low. See that if the market is reacting to off that level. So this is what I was talking about. If the market now, because it dropped down back below, we will be considering to, once the market breaks out, to take that move nearly to 47, 48 pip back above here. And hello sir, I haven't still heard from you. Please reach out to me. Can I buy gold on 4530? Okay. Now we see from this support level getting that reaction back above. Now, if we look at the overall trend, the market is slowly trying to break this lower shadow. This is on a key support level here in that area. As we see the progression of this session here, the recent support is at this level. on the halfway back below. So if the market eventually continue to drop well below, that might be this is a fake out, and that can happen in that case. If you look at the daily price action, it might eventually break that daily low here. And one potential scenario can happen, the market to come down well below to this daily low in that area. There's a doji here. The market structure here showing still the locally in that area to be, we see there is a change of trend. Still holding on to that trade. We might see the market to react off this support. There is a breakup structure. There's a breakup structure. There is a breakup trend. And looking at, if we look at the daily and the 4-hour level, this is the session's low. It was a very unusual break below. It happens sometime before the news, but that break that we can see could be an initial liquidity grab for a bigger move coming later. Okay, so that's where, now this is a lower time frame market structure that you can see in that area. So this is also an important support that expecting the market to, if the price respect that level, we could see that going back up to create a new higher high. Now, if this market breaking below here, that might bring that market even to the weekly low. Like to see that how far it is going. Okay, so there is initial reaction of that level. Price that I have open. Patience is key to trade the market. Patience and risk management, these are two crucial factors to be successful as a trader. Now in the meantime, as the market has come down for a pullback, we are looking for potentially another breakout here in that market. So this is a breakdown here now at the moment, and price in such an important level that from here, if the market bounce off, we could see the new higher high that can take the market back again above our entry. So because the market has dropped down well below here, has dropped down well below the support, we are looking at this market to go to the resistance line, and in that case you will be out with this trade at 45 pip to 50 pip at this high here. It might form an inverted head and shoulder here. If it forms an inverted head and shoulder, you might see that returning back again to the upside to this resistance line. So you see there is a smaller inverted head and shoulder that you can see has formed in this area. That is why we're looking at this market to go back again to create a new higher high. Okay, so there has been a narrower this is a very narrow doji on the support level. Good evening. We might see that inverted head and shoulder. We might see the market to bounce off this level, depending on how the price action is forming. So there are some narrower bearish price action has formed in this area, which might bring that market back below. So you got out with this trade. Stop loss. be opening for the trade as soon as it appears to be new trade. But this is a very unusual breakdown. We will be looking for further entry once we see the market, because there is an NY session coming, and this is the 4-hour price action which is approaching key support level. I'm still bullish, looking for bullish trading. Patience is key. Would like to see the market to come back here to this key support level before the CPI, and as there's a session opening coming, we might see the market to show significant move here in this market. Now this is the daily. Let's delete those levels. We will be looking for further entry for the next entry once the directional bias is clear here. So there's a significant break below here if you look at, and that is bringing that market, it's now below all this support level. There is a significant bullish fair value gap where the market left with the weekend opening. So if the market entirely break below, it's possible that this market to drop down here entirely with this big head and shoulder coming back here to the dollar block. If that is happening, that we might see with this upcoming session open. We will be looking for now NY session breakout opening. So far it's now in this area got to be bearish. Now this bearish move can even continue further with the NY opening with the CPI. There might be some unusual data coming, so that's why the market has created this potentially false breakout here. So it's a key data to look at. There must be new data coming. We entered here from the, according to the strategy, from the breakout structure. If you look at, let me bring that here. All setup may not always go in your favor. Sometime there, due to the volume change in the market sentiment, there might be change in the trend. So if you look at here, we entered here, right? What was the strategy here? So if you look at the market is in a trend, it's a significant breakout. We saw that once the market done the pullback, the price has come back below 20 EMA, created a new higher high, followed by a complete break from the structure again. Now this is in more often you see that in the second step of liquidity grab, the market will bounce off that level. Okay, so that's the usual the move in a trend. Now here there is a fail of that move is because of the most likely there is a fundamental data might be very different coming, and in that case, because there is a significant breakdown and the market didn't follow this pattern, instead it created this stronger downtrend, there is a potential now that it eventually could come back to the weekly low with the CPI. Let's wait for the session open to see, and the market may come back for retest of this weekly low here, right? So which is a possibility to happen. Now because you see that this is a clean downtrend now at the moment on this lower time frame, and there is a significant imbalance in that direction, so the market may continue to drop down. If we see that with the session opening break of structure, we can look for here an entry. The first step is to wait to see that what kind of price action it is forming. Series of lower high on the 4-hour chart. There is a drop down now. So I never trade against the trend unless we see a clean change of trend. This is a, if you look at here, okay, so this is an uptrending market structure, right? So because it is an uptrending market structure creating series of higher high and higher low, the global trend, that means that higher time frame bullish, the lower time frame also bullish. So always trading with the trend is the best way to trade the market, regardless of, there will be some trade always will fail, and that's the part of trading, right? You won't be able to trade always all the time, but the best part is that you remain on the higher edge and you do the risk management. The market sometime will entirely change the sentiment. That's the part of market. Now it's just one trade. We will be looking for more entries in the upcoming session. So if you look at the NOI, so the data coming in just a matter of an hour from this time, and the session open, I think it's 30 minutes, isn't it? Come on. So yeah, so in 30 minutes there is a session opening. What is the entry level for buy? Look, it's still here, it's showing that now the market is creating lower time frame downtrend. Today's low is here. At the moment I wouldn't look for buy, because there's a breakout structure here. The market has broken off that resistance. Now if the data coming very different, it entirely can come back down here to continue to trend down. Okay, because if there is a big change in the sentiment, we could see the market to come back to the weekly low. Now to go long, you want to see the price created a reversal confirmation and the change of trend. Is usually we could see that 4573. That's an important level that we can look for if we see there is a reversal confirmation here. We want to see an inverted head and shoulder and then to return again back to the upside. Candle close here on the lower time frame. So there is, because it has broken that support from the intraday, the potential for the price to come back another 62 pip is higher. And if we see enough confirmation, we might consider looking for entry to this level, but it's still not yet. We opened in an uptrend, so this is where the clarification that the trade that we have opened, it was in an uptrend, so we opened entry in the direction of the trend. Now it's turned to here, it's in a turn to a downtrend. If this market entirely break below, we will be able to see the prices coming here. So here, after break of this high, break of this low, it's pushing back to the upside. If the market failed to create a higher high, we might see it's coming back to create a lower low here. I think it's still preparing for with the upcoming session breakout. Planning for a possible entry, but before that we will be waiting for the session open, near to the session open, and approach that key level. Price on British pound US dollar is at daily support level, which is also coming to a very important key support level. We might be able to find a possible entry for coming down here, as there is a very unusual double bottom here, and the market has broken back to the upside. You're getting my point here. So it's break below and then has got that reaction back above. Now from the intraday, here is where the market is in between this support and resistance. It has to get the rejection properly for us to be able to sell in that direction. It left a massive imbalance here, and usually after this kind of imbalance, the market may hesitate to entirely go back up. See, it's getting rejection from the high. So looking at the multiple time frame here to see if the market is preparing for a further upside, or we could see that it's just a fake out here. And I think this is a potential fake out, as there is a session open coming, and I will be preparing for a possible sell here, as there is a very strong rejection of this. The market is on the 4-hour resistance line, Okay, so the bias here now, because it already tested the lower part, there is a chance for the market to drop again back below here. So in this level now, at the moment the market has bounced off that level. There is a session volume coming in 15 minutes. So here I will be looking at short entry from this breakout, keeping stop loss to above this level, so which is not a big stop loss. We're looking for 44 pip stop loss, and we will be looking for the entry back below 221. So it is a sell entry with 45 pip stop loss, and with possible retest of this support as the market left an imbalance here. So stop loss here at 4590.46, 4575.93 is a take profit level. This is sessions potentially to take the sessions volume. So I put my stop loss at 4590.60. Now here is what you can see, that overall market it reached that key level of resistance here, and So there might be a volume coming here. The buy after. Now price in a very important level, and from here, if this market breaks to the upside, it's gonna be that the price may try to create a new higher high. So at the moment, left a massive fair value gap in that direction. Then reverse back here. So as we will see CPI coming, we'll be waiting for the data. Here is the market. It's broken off that level, and will be still opening further positions. This is a complete false breakout here, and broken below, bounce off that level again. So probably we need to wait for the market to show up, in fact, which way it is trying to be heading. It's a very unusual breakdown and reverse back again. Okay, so the market structure from the lower time frame, longer pin bar here, entirely broken above that level, and so no trend line from the intraday. I think still there is a possibility for this market to with this reversal. This has entirely broken above this level. Here we need to be a little cautious because there's quite a few false move along the way. So because there is quite a few false move, there is a possibility for the market to remain bullish, because there is false move quite a few from the support level, and it's good idea to wait for the CPI to come up for further entry in this market. Okay, so few narrow doji pattern here on this lower time frame. We're going to see a bullish bias still here. So it's in a transition from a significant move that with the weekend opening, followed by 4 sessions pullback, and now trying to break out to create a new higher high. So this is the 1 hour long wick pin bar. It's very unusual break below and entirely rejected back above. Now how this 1 hour candle close, if it is closing below here as a narrow doji, you might see the market to come down here to fill that long wick. If it is closing above as a bullish pin bar, we might see the market to here continue to trend back above here to create a new higher high. So in that situation here, the market to either to remain bullish after this 30 minutes candle close that you can see it's entirely broken out of the trend line. So how after the candle close, if the market breaks below here, that we could see continuation, but there is a false breakout. So better to wait for the data to come up in 30 minutes, which is I think that's where everything will change after the data to come up. We might be having a break-even day if we can take the next one bigger move. So you need to look at now. Okay. Now, in the meantime, we had during the London session, we've taken the trade from this level. We bring the London session trade here. Most of the time during the session, the market breaks out of the structure. And okay, if it is entirely breaking out of this resistance line, it may continue to rise back above. Very sharp bullish engulfer in this area. Look at it with this order block entirely broken above. Might see the pullback and then so CPI will come less than forecast. CPI data will, no one knows. You need to see that how the data come. Then the market has shown in both directional bias. So if you look at that, this market had a breakdown and then breakout. So it's a false breakout. So when the market does this false breakout, if you look at this is a trend line, okay, and from the trend line there is a break below and rejected back above. So it's a false breakout. And when you fall into the false breakout, wait for the market again to resume in the direction of the trend. And once it resumes, so you can see that it has now broken out of this trend line. So the major trend is up and it now retesting the trend line. So if it resumes, then you could see the market to remain now in the direction of the trend. If it remains in the direction of the trend, that is where high probability entry. At the moment, back to back two large impulse here, and you can see this is a reversal here, and then the market after the reversal entirely broken to the upside. This is bullish price action now that you can see. We'll be waiting for a couple of rejection from here. When you have trade like this, you just need to be patient. Okay, so there is a significant bullish move so far and just has broken out of the intraday trend line here. So news spike might bring that market back below and then bounce off that level, or you could see that continuation of the trend and the news will take the market back to the daily high. What's your bias with the upcoming news? So I'm going to share post a poll. Let's see that what of your majority of thinking. So what's your bias on upcoming CPI? So share a poll here. You can share some of your thought. What do you think that with the upcoming CPI? Now, after a long day, there is a change in market sentiment again. So okay, so it's now on this lower time frame having multiple consolidation. Now with this multiple consolidation, there is a potential for break again and then to reverse back. In the meantime, I'm looking at also the British pound US dollar. If you look at the daily price action, the price is just getting a rejection from the daily high. So this market may also resume to the upside. British pound US dollar may reverse back to the upside here. While we can see the market to bounce off this level here on the lower time frame on gold, and so there is a crossover here, and you can see it's getting rejection back again upside. Now the current level of support that you would like to see the market to break is here before the news. Okay, so it's now established uptrend again. So with this established uptrend, possibility here the market to continue to rise. Now broken out of the trend line, so maintaining now an uptrend. And so because it's maintaining an uptrend, we might see that now the price to create a new higher high. What we are looking at now for an entry is that we want to see now a break of structure of this trend. So the market established an uptrend here with there is just volume coming with the New York session opened, and if the market is straight drop down here, we have 20 minutes before the news, we can look for going long. If it breaks earlier, at least 15 minutes earlier than the news, otherwise we will be waiting for the news to come up. Risk management is key. So this is the 4-hour time frame. It's entire bullish breakout from this 4-hour 10 EMA, entirely broken back to the upside. See that it's creating series of higher high and higher low with a smaller narrow red candlestick pattern. It's not showing any slowdown yet. So another 15 minutes before the news, I think this, what do you think, spike might be to the upside. If it breaks down below before the news, we will be looking at on a breakdown. Otherwise it may potentially continue to trend back here to the upside. Okay, so there is a pullback now. It has created an upside momentum. Therefore, pullback below is an opportunity to go long from the 15 minutes price action that you can see with a big bull candle close above. Okay, creating that stronger bullish impulse in that market. We have 14 minutes for the... Is there any high impact news coming here other than the data? US CPI preview, inflation expected to be muted in December as economic data gets back on track. Global central bankers unite in... It's very... Anyway, focusing on the currency. Now, core CPI, where tomorrow also you see that PPI. Now today's CPI, how the market is really reacting to that. It's interesting because after this initial drop, it was looking like the market will drop down further, but it entirely bounced off that level. Now, with this breakout here that you can see from here, the market may eventually continue to rise here back above here to create a new higher high. So after this 30 minutes false breakdown that you can see, the market has created another bullish breakout, and that could lead the market to eventually... This is a sign of a breakout here, very clear sign. So that means now we have a directional bias with the trend that most likely will see the market to go back to this high. Now there is data coming, right? And the current low at 4590. You want to take a risk here. Risk means that not high risk, but risk of the news. So we could look for this is a very high impact news. Now with a smaller risk, if we look for, I'm still not opening, but this is a primary planning, that if we look for bullish entry, spike might take us exactly to our entry, and $4618 is, it will be almost nearly to 150 pip move. So with a very smaller risk, guys, I will be opening here a buy entry. Now if you not managing the risk, then this trade is not recommend, like not at all. Okay, if you have a smaller account, also no trade here. For the medium size and risk managed account, here I will be taking this trade for, and I will be running during the news, so your risk must be very smaller. The aim here is to take that spike back to the upside, and it's gonna be, if the market successfully move back up to the spike, it's gonna be 170 pip move, and that's that has a risk. So I'm taking a very smaller risk with this trade, with a stop loss little higher, 4588.83, with only 0.5% risk on this trade, and taking the TP target at 4618.94, and waiting for the market to potentially have a spike back to the upside here. So if it successfully move back here, we will be taking this trade closing at around 160 pip, as the market is in a trend. So I'm taking this trade with a smaller risk, nearly to 0.5% risk. So in terms of pip wise, it will be nearly to the half of the pip of our stop loss, and I will be running the trade during the news. So the goal here is to take that spike here, and that will, you know, successfully moving, the market will go up a lot, and that can, if the spike is going to the upside here, we will be taking this trade nearly to, with, it's gonna give us 160 pip potential move in this market. If it successfully goes up, the risk is very low, as I mentioned, guys. If your account is bigger, probably 0.25% risk is ideal. Okay, 0.25% risk or 0.5%, not more than that, in case the market get a spike below, so that you are not stopped out with a bigger risk. Have a little wider stop loss. So if your account is smaller, then probably you can not open this trade at all. Looking at to see the data in 6 minutes, and if you have any trading account that has a news restriction, then not to open at all. Again, I'm clarifying so that you guys not falling into any news trap. So if your trading account has a news restriction, then don't open at all. It's only not for any prop account at all. It's only for regular trading account with tight risk. Okay, with 0.5% risk, regardless of the stop loss speed. So waiting for a possible spike. Now this is an attempt to, if this trade successfully move to the upside with the spike, that, you know, if it goes fully, we can take almost 160 pip. It can go any direction, but if it successfully goes, it's gonna give us 160 pip, which is, you know, will bring us today also in profit net. So that's gonna be huge. And let's wait to see. It's a breakup structure. Now this is a 30-minute candle, right? So you would like to see that this 30-minute candle closing as a healthy bull candle, so that the next one to move again back above. It's rejection again. So there is a here some so this is a consolidation here, expecting that the market to have the continuation of this uptrend. Okay, getting upside here. All right, so when I take that move potentially back above, you guys ready for this move to take here? And okay, that's a spike back to the upside, 109 pip. All right, I might close anytime. I'm still running in, and I took that 100 pip. I'm closing it with 100 pip move, 100 and okay, so still on it and closing with 120 pip upside closed. So we have taken 120 pip with this move, depending on how much. So this is how trading is, guys. I would make it less a little bit because there's, let me see exactly in the close trade. And 10 people, 3 trades, got little over the break even. Great trade. How many of you were on this trade? Can you give a thumbs up? And also let me know in the live chat if you were in this trade. This is a big one. And how many pips you have gained with this trade. So we covered the previous 2 trades plus this one here. That's what we need to do, isn't it? The trading is like that, guys. You need to make sure that thank you, risk manage is the key. Okay, if you have a losing trade, don't lose everything with that losing trade. Keep the capital for the next one to give you back again, including the profit. So that's how we can keep winning. You'll never be always winning all the trade, but once you can maintain that risk management, it's gonna be much more easier for you to take the trade, to trade based on the risk management, based on the strategy, based on risk setting. Well, you see that if you look from the daily support, there is a rejection on British pound US dollar, and that is also liquidity sweep here, rejection back above. We'll be looking at that later. So here now the part here, guys, is that not only the trade but also the education behind the trade, right? So it's the key that we always follow the education, which is very important to look at. Especially you see that there was a unusual breakout here and it has shown significant bullish trend. If you look at the daily here, market has just crossed the daily high, so there is a potential for here now for the market to bounce off and to create a new higher high here on the daily, which is eventually could lead that market back up here to create a new higher high. Okay, so it's pushing that back above as we discussed, and the trend is still remaining, and we might see the market to keep pushing high here to create a new higher high. So, and in the meantime, traders, if you haven't subscribed yet, you can do so. Make sure you like this stream, and also check out below all the links for many of the things that might be beneficial to you. Here we have a great trading community that we are trading every single day, learning, growing as a trader. And by the way, this is the second day of the trading week. Today I would consider a break-even day, though we had a massive winner here, but I had to trade, didn't work out, but it's fine. Throughout the, this 2026 is a great year. As with every day, we are having a great strategy that we are trading based on the breakout, based on the strategy. Now, tomorrow coming up, another big trading days. If you look at coming up PPI, right? So like the CPI, also we are going to look at the PPI. Now this trade that we have opened, I will be posting analysis later today, more in depth on the channel for educational purpose, so you can check that out as well. And here in this channel, we trade based on risk management, based on analysis. I believe you enjoyed this session and you have learned something from here, you have taken something from here. If you enjoyed, make sure you stay connected. See you there again tomorrow, trading live again together. Until that, stay well, stay happy.